Welcome back to the Leading Detection podcast, the place where people who are leveraging technology to fight fraud come together. So I'm your host, Matt, also known as the Fraud Detection Recruiter, and this podcast is sponsored and brought to you by Sedulo Search. So great episode today. We're joined by Nauman Abuzar, a true expert in the field, coming from the compliance background and now driving the force from the product side. So Director of Products for AML and Risk Solutions at Sion. Great episode today. We're talking about AI implementation approaches and especially between fraud and AML and how those strategies differ, but also how we're starting to move away from that siloed approach and how AI is helping it to be more effective, albeit a little bit more risky. And rounding off the conversation, we couldn't not talk about stablecoin and the boom that it is going through and what that actually means and how it changes things for fraud detection. Great episode. Enjoy. Welcome back to the Leading Detection podcast. Yes, and today we're joined by Nauman, who is the product director of Sion. I'm sure many of you know Sion. And we're going to be talking about the AI implementation of fraud and AML. And also a very hot topic, we're going to start talking about some stablecoin updates as well. So welcome, Nauman. Thank you for joining us.
Thank you, Matt. Thank you for having me.
Amazing. I know you've been quite busy on the road at the moment, so it's good to have you sat down in one place and been able to have a chat.
I'm glad for that.
Back and forth from London. But appreciate your time today. And it's some very relevant topics. Let's start with setting the scene. When we talk about fraud and AML, there's a big kind of push to get them together. But let's set the scene. Why were they set up separately in the first place?
I think AML coming from a regulatory perspective, and it's more like a must-to-have kind of obligation for most of the firms. And fraud is more like a business and strategically driven, a risk. It's not something coming must-to-have kind of obligation. So it's pretty much strategically seen by the business owners to, align, like if they need to implement this kind of risk. But we have seen recently now, it's been changing. The scope is evolving around like how these two operations can be aligned, and even regulators are currently looking into a more, dynamic customer view rather than the static customer overview, which can eliminate both risks. And
So what's forcing the hand? Is this a decision that they have to make, or is it just something that they think is more efficient, more effective in the future?
It's more like more effective and efficiency around the operations and detect these suspicious, or bad actors who are abusing the financial ecosystem across the globe. I think previously most of the firms were using static data approach to monitor these kind of, all the users or customers. Most of the suspicious report has been filed over the last couple of years, came across like the fraud patterns are really high. And now customers are, the users can, be legit during the onboarding, but can abuse your platform later on, like to use and the use of these new technologies, AI, and, the synthetic IDs and all that stuff can actually bypass most of these AML solutions. So I think regulators are now emphasizing to use more dynamic customer data rather than static, which usually helps both fraud and AML team to, monitor and eliminate any sort of risk.
Yeah. So to use a kind of software engineering term, they're trying to shift left, right? And try and bring it, because there can't be any money laundering without fraud effectively.
Exactly. Ultimately, the fraud is going to generate revenue for launder to launder the money, right? There are kind of different approaches, like different reasons around that. But we have seen recently now regulatory reporting as well. For example, SAR or STR does include, behaviors around fraud rather than money laundering as well. Before it was very focused to, structuring or smurfing or money mules around like money laundering typologies. We have seen like now FinCEN or, EU regulators or FCA are more, largening the scope around adding these additional data points that could help them to create a data of those fraudster, including all type of dynamic information which comes across IP or device or email and those kind of stuff.
So, are you for FRAML? Are you for the grouping of the teams, or do you think this should be still separate but just sat very closely together?
I think I have seen recently, coming from regulator as well as most of the organization, taking an approach to moving away from siloed operation, because I have seen recently Wolfsburg who are actually this setting guideliner for most of the banking or financial institutions, are emphasizing to implement or going away more like siloed operations for both fraud and AML team. I think the data that fraud team can see, it's gold for AML team as well. So you can have like a more customer centric or like holistic view for the investigation, and it brings more efficiency. Right, like Wolfsburg reports specifically mention like they want to bring more effectiveness and efficiency during the investigation, and rather than it's not about generating a lot of alerts, it's more about generating the right sort of alerts. It usually helps both teams during the investigation to have this sort of data.
So it's not really helping fraud teams do their work, joining with them AML. It's more supporting the AML teams to have a more of a holistic view.
Correct, because frauds are the one who are like detecting and reviewing or generating suspicious patterns more like faster way, you can say. Because if you talk about the life cycle of the user journey, starting from registration, where we get this dynamic information of the customer, and it's way before the KYC, where they are starting doing or starting building a relationship with any digital platform or payment platform or any financial institution. The data that you're collecting at that point is key for team to detect any fraudster and eliminate that part right before hard KYC. And then it comes more like a KYC part, where if KYC team have that information, they can definitely make a quick decision or create a rule or automation around like which customer they need to accept or reject at that point. Yeah. And then of course, like screening and monitoring. And monitoring, when it comes to monitoring, it's also then come around two ways, right? It's more like AML transaction monitoring, but then you need to have like behavior, session, events, and many other typologies that you need to monitor or screen. So for example, if you see, stolen devices and all those kind of stuff can be detected during the session monitoring. So for example, if I'm using an application based in Amsterdam and I'm traveling a lot and I'm being into Georgia last time, I was doing a transaction and it triggered right away a selfie check for me. So that kind of checks are pretty required for both teams. So right, you can avoid any risk of fraud, but also like AML. And then of course, reporting does require a lot of data points now. So you need to include not only customer static data, but also the other information around IP device that could help regulator to use that data to circulate that information across the financial institution.
It seems like a non-brainer, right? It's more efficient, more effective. What do we need to be cautious of, or what are the kind of sticky points when merging these teams, if there are any?
In terms of controls or implementing controls or, something like that?
Yeah. Obviously, it seems like the perfect solution to merge them, but is there anything that we need, any issues or speed bumps that we need to be aware of?
Yeah, I think a strong governance is pretty key for this implementation. And having making sure that the data you're enriching is gonna add a value in your investigation, and of course a feedback loop during the suspicious investigation. We at Sion have seen most of the customers adopting our solution more for having a very enriched data for their customers, starting from registration until reporting. So that help them and use that information as a consortium to share with other institutions as well. So that's also something we have seen. Most of the firms are looking for a solution that usually share data, of course, in a very data protection guidelines. And, we don't share like which firms are not, but that's really key, right? Even if we talk about US, FinCEN have like more like 314B, which is more like a shared financial institution data, for that kind of perspective. So I think that three elements are key, like having a strong governance, like, bring efficiency, using the right enriched data, and then of course feedback or like consortium.
Yeah. So it sounds like a focus on more risk-based techniques when we're implementing all these kind of new processes.
Correct. Like risk-based approach is key. I think, as I mentioned in the beginning of the conversation, like it totally depends on companies or institutions' risk appetite, like how they want to take a risk approach. But we have seen the fraud risk is, it's in every digital industry, right? So you cannot it's pretty fast that we need to be ahead of them to eliminate. So I think, and then like implementing that kind of risk-based approach is always key for that.
When we talk about there's so much data that humans can't observe anymore. It's just the way it is. There have to be tools, and with tools comes risk because who's responsible? So how do we balance this? So AI is as a process, as a strategy, generative AI as well as ML, when we talk about AI as well. So how is it more effective combining it with risk?
Right. I think AI is key in detecting any fraud or money laundering patterns. There are a couple of ways to do that, but I can break it down into a couple of I'll break this topic into a couple of ways.
Yep.
Let's talk first about how you can use AI within the technology space, and we have seen how firms are utilizing AI to automate their process. I think machine learning is the one key block box, or scoring and all the stuff that actually trained based on the feedback loop, which I just mentioned, like key for institutions. And even at Sion, we use like a pretty strong machine learning capabilities to share consortium data, right? Then comes the AI and automation part, right? So there's some very misconception around like AI can make a decision, which is not true, right?
Not yet.
Yeah. And recent report coming from EBA, which is a European Banking Authority, they said like 90% of the banks in the EU use AI, but they don't know how it works, right? So that's the challenge where it comes. The right governance, when I talk about governance, it's key for any financial institution or even like non-regulated space who are working with parent companies. It's key for them to make sure how AI is working. So explainability is really important. They need to know how the AI and models are actually working around and making a decision. And now when it comes to a decision, it's really important for regulator to know how the decision has been made, because human in the loop is important for regulator, right? That the decision on the suspicious patterns or suspicious activities, they really need to emphasize or understand like how it's actually working. In my opinion, the way Sion is taking an approach on using AI is to bring efficiency around the process so they can help analysts and during the investigation to create a summarize and, removing a lot of manual step and like bring like an efficiency in the procedure. That's key for most of the firms. Even we have seen a couple of cases in EU and US where firms are actually using AI, but regulators are like pushing back or making like hard obligations or like penalizing them around if they are not, because even regulators are trying to understand like how AI is working, and we are still not there. We have seen a lot of guidance coming in from Wolfsburg or FATF or FinCEN, but I think we are far away from implementing the right decision-making AI models for money laundering or fraud. So I see in a different way here. Like I see more like to use AI to help bring efficiency or effectiveness in the process. And I think, again, the right governance structure for AI within the framework, ensuring and understanding or ensure like you can explain how it works is really key.
And do you ever think it will get to a point where the models or AI becomes so strong in what they're trying to work out, but they can't explain?
Yeah.
That we loosen the need for explainability?
Yeah, I think that the models getting hallucinate at the time where they cannot understand the data. So I think the ongoing, training of the models and understanding them right, models are well trained to help teams or financial institution in such risky investigations is really key. So I think that's ongoing exercise, right? So we need to make sure that the firms really understand. I myself came from a pure AML compliance background,
Yeah.
working in fintech payments for the last 15 years. But it's been only 3 to 4 years I was very much involved into a product space for compliance. And I think we have seen that most of the gaps in the industry is that compliance team doesn't understand how the solutions are working, and solution provider doesn't understand what are the regulations, how the compliance process really works. So I think the collaboration and co-designing is really key for the industry. And I'm just sharing, like, because
Yeah.
we at Sion really do a partnership, and we do like a very co-design approach with our clients to make sure we understand their process and try to translate into the product. And even like implementing this machine learning consortium and AI models, we make sure that it's pretty much well explained the way it works, and it helps them to explain their regulators or even like third parties if they are working with partner banking model, or banking as a service model, or
Yeah.
payment service model. So yeah.
Who do you think needs more education? The compliance side to become a bit more fast moving, a bit more adaptive, or the AI techies or the developers who are moving and are used to moving super fast product life cycles, moving really quick, getting them to slow down a little bit and understand that risk and compliance takes a bit of time.
I think both parties needs to do that. But I think like when it comes to product actually try to understand how the process really works, and they build a product around that, process, or like try to understand the use case and the full flow, or the pipeline of the procedure. On the other side, I think there is a lot of or lack of understanding for compliance teams, because they are very much focused on day-to-day operations, and they are well enrolled. And I have seen companies now taking an approach, having as dedicated product members within the compliance that helps compliance team to build solutions, taking they are kind of a bridge between the product or the solution provider and the compliance team. But I think the understanding for compliance teams is also really key.
And what about the regulators? Are they savvy enough? Are they starting to understand? Because you've got potential, right, with what's on our hands with the tools, the AI, the ML models, and we've got hesitation, the fear, the risk. You've got two different ends of the spectrum. How are the global regulators dealing with that?
I think global regulator really rely on some of the legacy platforms who are been into space for a long time. And if they heard, okay, if you're using X solution, you're good, but they don't really understand the implementation or the architect of that, or the backbone of that solution. So that's really important, and how usually those solution works. But I have seen a recent change, like where regulator requires such solution to have certain certification or approvals. Some countries have like hard requirements, some countries have like soft approvals. And I think it's been changing over the period of the time when it comes to more like around ITV or AML sanctions screening. That's the most highest or risky part, right? But then, of course, the combination of GDPR, CCPA, and the AML regulations there are like certain states in the US and even few countries in the EU. And if we go to APAC, I have seen there's kind of requirement arising where you need to have like a soft approval, or kind of certification to provide such services, especially to the regulated companies.
So it sounds like that when it comes to AI guidelines, it's softening a little bit. It sounds like they're being a bit more understanding of what can be done.
Exactly.
Nice. And AI, fraud, FRAML, do you think it's overhyped at the moment, or are we just kind of getting started when it comes to, I'm putting you on the spot here a little bit, but yeah, because we've seen with the models, they've plateaued a little bit, and it's becoming more important to build something yourself alongside. So yeah, what's your opinion on finally getting the use out of the potential?
I think it's still kind of a hype, but I would also see it as a threat for because if we are not going to be on top of these technologies. I
Mm.
think Monster can go and they can grab much faster than us. And we need to be a step ahead from bad actors and try to understand the patterns. And we have seen like over the period, like a lot of new trends, new patterns, and try to train our models to detect these kind of, behaviors and adding, you know, some static rules on top of it if we
Mm.
have like, and that's why regulators are pushing more around like dynamic customer data, which was not something as a key requirement if we go a few years back, right? So that usually help us to detect some behavior patterns around the user and detect anomalies. So yeah, I would say like I cannot be certain about it, but to me personally, I think it's kind of a risk as well as,
Mm.
uh, and an opportunity as well.
Yeah, nice. Well, a good way to round off the kind of first half of the conversation, because the second half, it's quite fresh, it's new. We're going to be talking about stablecoin. Of course, crypto has been around for a while now, but stablecoin seems to be the more likely route to implementing that into day-to-day life. So what does that mean for fraud detection?
Right. So if we talk about customer journey, it's gonna remain same. Like
Mm.
I think let's talk about stablecoin, and it's one of the like fast payment model, like the fastest payment method or infrastructure, because the payment flows from blockchain to fiat, and fiat to blockchain is better like in seconds rather than a few minutes, right?
Mm.
So it already brings a lot of risk because of the fast payment methods, right?
Mm.
And I think the major gateway is like, having fraud checks during the registration and having a strong KYC, KYB program that could eliminate a lot of fraudster to enter into your ecosystem. But then it comes to more like detecting patterns of, different blockchains or like, different payment methods. I've been, working with a couple of stablecoin companies and seen like how the payment trails are being working through
Mm.
ACH or to Wire or Swift or SEPA to stablecoin. The monitoring mechanism has been grown, so you need to have like both KYT and transaction monitoring to monitor these kind of capabilities and detect these fraud behaviors. I think the scope of screening and monitoring has been increased for this space because of
Mm.
the type of infrastructure that has been built. It's on the one side, of course, it's a booming or like most adoptable payment infrastructure that has been adopted by most of the financial institution, including banks. But of course, that enriched data can also help you to monitor more effectively. But if you have like strong controls in place, you can definitely able to detect these kind of patterns.
Yeah, and say it went live tomorrow. Say if I don't know, there was an announcement, right? Stablecoin. I know that is it SoFi? They said the stablecoin will be used. But say every bank just decided overnight, right? Stablecoin is going to be released. What would the first things need to be done from a fraud perspective to create better
Yeah.
guardrails?
I think the fraud checks during registration and onboarding is key, but also like I think blockchain screening,
Right. Okay.
because we have seen a couple of scenarios where these wallets who has been or the assets that has been used in dark sites or scams or stolen funds has been also moved around. But I think that the blockchain technology itself is very rich, right? So you can
Mm.
you have like a full trail of the um, payment, from different hubs. You can monitor that. So it's key and like it's pretty convenient for most of the firms to monitor that. But I think from a fraud perspective, having like a right technology, right solution, right controls, the gate
Mm.
to block them right away during the registration is key. And then of course having like an ongoing monitoring to make sure that you don't deal with any stablecoin assets that have been generated through these risky wallets or risky schemes that have been generated over the periods and
Mm.
then use or abuse your platform to launder or withdraw those kind of flows and funds.
So does stablecoin potentially have the chance or the opportunity to improve kind of monitoring?
Correct. Because and it's important, right? Because if we are using fiat model,
Mm-hmm.
we don't have a visibility on third party payments, right? We cannot see which bank have which sort of information. In blockchain, you can actually monitor every cycle of that payment operate like that has been generated through your ecosystem. So you can see that if it's coming from X exchange or any hot wallet or cold wallet or like non KYC wallet, right? So you can add or take a risk approach to monitor these kind of patterns, and either you want to facilitate those funds or not, right? So you can build a lot of controls, and I think it's much secure in terms of like to when you talk about like from a risk perspective. Fiat is always been risky when it comes to third party payments, but I think in blockchain you can definitely detect and eliminate this kind of risk right before you engage with them.
And is this something that is on the product roadmap to start introducing?
Yeah. We already working with a couple of exchange and stablecoin companies where they are trying like they integrated with our solution, and it gives more like a holistic. Like we at Sion, like our goal and the way we have built our solution is like a full command center for both fraud and AML, and we can inject any sort of data, right? So you can send blockchain data to have like a customer view where you can see crypto side of it, fiat side of it, the linked wallets, linked accounts, and have like a full customer risk profile that could help you to, investigate or like monitor, build rules on top of it. We do have like in our roadmap to introduce our own blockchain screening and everything. But yeah, even as of today, most of our customers can still send that information using our custom data field.
And as a fraud specialist, is it kind of not the dream, but the Valhalla to move away from fiat completely and go on to stablecoin? Would that solve a lot of problems?
I think stable is not going to like replace fiat. It's more like it was a long waited gap or between fiat and crypto assets, I would say, in this scenario. Stablecoin are like much lower risky assets that could be integrated with fiat because of exchange, because of most of the other things. But I think it's bridging the gap between crypto world and fiat world, right? So if you go only 2 years back, and if you talk to any bank about crypto assets, they will walk away, right away. So I think that for me, it's really an interesting move. I think it's going to help not only financial ecosystem, but also like compliance teams or solutions to have more combined ecosystem of crypto worlds and fiat world and then it is going to bring a lot of strong, you can say like it can boost like an ecosystem of financial world. So in that way, if I can mention. Sorry, I lost your voice.
Is it going to when we talk about global payments now, when it comes to stable, is regional acceptance going to be a smoother process?
Yeah. I think already just last week, I think Brazil also, reduced their regulations for crypto. I think by 2026, end of 2026, they will be like 100% live with those regulations. So all the companies who are operating in Brazil has to go with, for that license. US already introduced Genius Act, so I think it's already implemented. MiCA is like another level, right? So I think grandfathering period for all the EU states will end by mid 2026. So APAC, if we talk about APAC, I think Singapore already introduced stablecoin regulations. The adoption of stablecoin is way faster than the crypto acceptance, I would say. And I think it's helping cross-border payments a lot. So that's why these regulations have been adopted much faster than the crypto exchange regulations. So yeah, the adoption is way faster than the other regulation, I would say.
Yeah, crazy. Well, yeah, very bite-sized kind of introduction to stablecoin and what it means to fraud. And yeah, we briefly touched on the different strategies for AI and AML and how the silos are changing. But yeah, really appreciate you joining us today. But we can't let you go, of course, without asking what you're up to, What's coming up next? Yeah, what have you got lined up?
Yeah, I think at Xeon, our day-to-day focus is to build, a full command center for both AML and fraud team. Xeon has been a pioneer in fraud solution over the last many years. For last 2 years, we have been building our AML stack, and we are now pretty proud to share, and we have a lot of customer profiles in our portfolio that have been using us for both fraud and AML, and this is something helping most of our clients to bring efficiency, streamline their process. And I think if we talk about the customer journey from an AML compliance or fraud perspective, it starts from registration and ends at reporting. So at a single product, at a single suite, we can offer and we can enable the full life cycle of the user to monitor, from registration, screening, monitoring, and reporting. And we have been adding a lot of AI functionalities. Our machine learning capabilities are already live. Most of our customers use, we have like 5,000 live customers, that the share data is really rich. So this helped most of our customers, and we are pretty confident about that. AI capabilities has been something we recently launched last month, with Copilot, analysis around screening or monitoring and having a customer view. Ability reporting, like integration with FinCEN, filling of the full case file, removing a lot of manual efforts, and having like a full investigation audit trail to the narrative is something we are really proud of. So, yeah.
Awesome. And you've got some events coming up for the rest of the year? You're always on the road?
We always been on the road, and I think our presence and existence has been grown over the last couple of years, really rich. We have new office in Singapore. We have been expanding to APAC. Our team is currently in FinTech Festival in Singapore. We have our even next week Tech Connect in London. We had in Austin 2 months ago, which was really success. So yeah, we have been partnering with many events, been on a couple of panel sessions, myself, our president, our CEO. So we really enjoy talking to the audience who are coming from both fraud and AML compliance from different sectors. Yeah, we're pretty busy season.
Amazing. Well, fraud doesn't have a day off, so I expect it.
I'm really, I'm really concerned about the Christmas holidays most of the time. So being a compliance professional previously, I'm more into product, but before I know that Christmas was never a holiday for AML or fraud teams.
No, is it 2 weeks out? We've got 2 weeks until, well, as of today recording, we've got 2 weeks till Black Friday, then Cyber Monday, then the Christmas holidays. Exactly. So
I was about to mention Black Friday, the sales. So yeah, most of our customers are like from such industry or ecosystem. They have like all these digital payment. Like we are pretty much into iGaming sector, fintech or e-commerce. So yeah, these are like the most riskiest days coming in.
It's that time of year. It is that time of year. Well, best of luck to everyone who's involved in the end of year rush. But no, man, it's been an absolute pleasure. Thank you very much for joining us.
Thank you, Matt, for having me. I really enjoyed this conversation, and we probably see you again another time.
Absolutely. I'll hold you to that. Thank you to the listeners. Until next time. Bye-bye.
Bye.